Greetings viewers. For those who don't know me, my name is Isaac Jonas. I like to talk about personal finance and investing because investing to me is personal. I started investing when I had like $300 in my brokerage account in 2020, and over years I have added and increased that income to a decent amount. But throughout the process, it was very difficult for me to get information. Right, so my background is I'm an economist by academic training, but I also understand and try to read a lot of books about investing psychology because I'm realizing that it is also important to control my emotions when I'm investing. So in this video, I'm going to share with you an update in terms of what happened in the stock market this week, as I usually do, including earnings, but also some economic updates and how I am investing in my portfolio. So the stock market this week has been very volatile. It started on the negative territory. If I look at the S&P 500, for example, particularly Standard & Poor, the major index, it went as low as 4,970 units, but it also went up 5,108 units. So it was very volatile. But in all that volatility, what was playing out was that this week, midweek, Meta, they reported their earnings. They did beat their revenue expectations, but in the earnings guidance, as Mark Zuckerberg and the leadership at Meta platforms, they said something that the investors didn't like, in my view, because they are now starting to spend a lot of money, the capital expenditure on metaverse, and something that they did in October 2022, and the stock dropped to about 40%. So it dropped by about 15% or even more, but usually markets overreact, and it dragged the whole market. So for me, I was taking that as an opportunity to add some more shares for my exchange traded funds that track the Standard & Poor index, because I believe in the core position, in the sense that the US economy over the years, it has gone up, but I only want to buy when it retraces to certain levels, like any level. Like right now, if it retraces to less than 5,000 points, I start to add on my positions that I have for the index, not on individual companies. And what also happened was that Google and Microsoft on Thursday, they then reported earnings. They also both beat their earnings, fantastic businesses, and their stocks rallied as well, and even pushing the market up, because the major index like the S&P 500, Microsoft and Google and even Apple, actually it is, I think, the highest percentage. So mostly they really move the markets. So what I'm learning from this is that it is very important to be patient, to have some cash, but also pay attention to some economic data. For example, the PMI for April, it came up lower than expected, 49.9. It means the manufacturing sector, it did not expand as expected. Analysts were forecasting 52 as the number, but the services sector, it did expand. It went up. It was 50.9, the measure, but also the analysts forecasted 52. Now, the new home sales were higher than expected. 693,000 new homes were sold versus 688 that was forecasted by analysts. So people are buying homes regardless of what they talk about, the possibility, the inflation, and the GDP. It was actually released, the data, on 25 April. And it came up lower than expected. The forecasted number was 2.5, I think, and it came up 1.6%. The initial job claim, there were lower people who filed for unemployment, 207,000 versus 214 that was forecasted. So more people are at work. The core PCI inflation is stubbornly high. For the month-on-month, the core PCE price index for month-on-month, it was actually 0.3%, which was forecasted by analysts, but the year-on-year, the core PCI index, it was 2.8%. Analysts forecasted 2.6%. So, in conclusion, what this means is that when the Federal Open Market Committee meets on April 30 to 1st, they will make a deliberation. They can either keep the interest the way they are, or maybe hide them. I don't know. What I do as an investor is I keep some cash. I have take my time to research individual companies that I believe in, but I also average down when major indices, exchange-traded funds that follow major indices that I own, retrace to certain levels. It's very simple. And I also hedge my portfolio, like I said in the past, like owning some assets that are not correlated. Like, for example, if the S&P 500 drops, I've seen that the VIX index, it usually spikes. So the exchange-traded funds like UVIX, I'm not promoting them, and this is not financial advice, but that's what I've seen. It goes up, it goes in opposite. So that's what I do, so that my portfolio, at least I have that small cushion. So for the most part, I'm thinking long. In other words, I hold positions that I believe fundamentally the stocks or securities will go up. But at the same time, I can have 5 or 10% that I invest. I have more than that, actually more than 20% in cash, but also in assets like the volatility index, exchange-traded funds that I mentioned as an example, that can work to my advantage. If the market drops, it goes up and I cash out and even buy some of the individual companies that I like. Also, I'm learning to be patient with the market. Meta dropped to the levels that I was also considering buying, but if it had gone below $400, right, I would have considered buying, because the fundamentals, they are still okay. Each time that I invest in a stock, I like to understand their story, and I analyze some stocks on my channel. You can check those out. I don't just gamble with my money, and I don't want to invest more than 10% in an individual position. So I thought I would just share this, that investing is very risky, but sometimes I think at the end of the day, trying to read a little bit, understand what is going on in the economy, but also keeping some cash, and also not just following things that are in the headlines without understanding them. So I thought I would share this. I hope you have a fantastic week and you find this particular stock market updates helpful, and also you do well in your investment journeys. Thank you, and I wish you all the best. Bye bye for now.